Welcome to the discussion on policy direction for digital finance, organized by Korea Institute of Finance. We ask all of you to please wear your mask and also put your mobile phone into silent or vibration mode. First and foremost, we would like to invite President Park Jong-kyu of Korea Institute of Finance for opening remarks. Please welcome him with a big round of applause.
Hello, everyone. My name is Jong-kyu Park. I'm the president of KIF, Korea Institute of Finance. KIF was founded 31 years ago in 1991, and we are doing various policy issues, including financial policies, like financial regulations and other various macroeconomic and microeconomic policy issues. Before I read my welcoming remark, I'd like to suggest to you something. Now I see we have only few foreign guests here in this room, and so by the principle of tyranny of majority, why don't you let Korean participants speak their talks in Korean? Okay, and for our foreign guests, simultaneous translation service will help them to understand what we are talking.
Hello, everyone, once again. My name is Park Jong-kyu, president of KIF. First and foremost, welcome to the seminar on discussion on policy direction for crypto assets and policy directions for digital finance. We want to thank you for your time. We'll be talking about the main issues of the digital finance and the policy direction implications. And for that, we would like to thank the Fintech Center of Korea and also FSC for organizing this event. And we want to thank Assistant Managing Director Lim Tao-ling from Monetary Authority of Singapore for coming all the way to be here with us. We also would like to thank our speakers today, Professor Park Sun-young of Dongguk University and Professor In Ho from Korea University, and also would like to thank the panelists of the day. Thank you very much all for your valuable time. As you all know, digital finance policy is gaining attention not just in Korea, but around the world. For the past few years, digital asset market has grown explosively, and at the same time, you know about the issues of the Terra and Luna, which really threatened and gave much damages to the investors to those assets. And in that process, as you all became clearly aware of, investor protection and the market regulation and the rules turned out to be extremely important, more so than we thought. Therefore, this cryptocurrency has to be within the framework of the existing regulation and regulatory frameworks, and that has been the topic around the world. And at the same time, digital assets are traded and transacted around the world. What that means, the collaboration and cooperation on an international basis and the balanced policy framework are essential. In Korea, there is the regulation system and the framework that's being discussed on the topic of the crypto assets. But at the same time, again, the boundaries are very broad. It's from the issuance to distribution, and that overall ecosystem will have to be all understood, and the breadth and the depth of it will have to be understood and factored in when devising the frameworks. Therefore, I believe that today's seminar is going to be extremely crucial, as we'll be talking about various issues on the crypto assets and digital finance. We will also be able to exchange ideas from abroad as well, and having the experts from Korea and abroad, I believe, is very meaningful. Digital asset market has been developing, and just like any other markets, it requires institutional framework, and it also have to have a ground for the fair competition, as well as a very strong measures for the investor protection. Only when we have those as the basis, we can build the trust of the market amongst the investors, which will ultimately bring us to the next level for the digital finance markets. I believe that what we'll be talking about today will shed us light on where we need to head in the future, and I look forward to listening to all the discussions. Thank you very much for your participation. Thank you very much, President Park, for the opening remarks. Now, for the first presentation, we're going to talk about the impact of digital asset on financial stability. And for that, we are happy to have Mr. Lee Tae-gi, Director of the Finance Innovation Division of KIF. Please welcome him with a warm hand. Good morning, distinguished guests, ladies and gentlemen. As introduced, I am Lee Tae-gi, Director of Finance Innovation Division at KIF. Today, I'm going to talk about the impact of digital asset on financial stability. If you look at the table of contents, I will first start with how digital asset and the equity market is really being synced nowadays, and we'll also talk about the channels through which digital assets can threaten the overall financial system. And we'll specifically look at some of the channels. And number three, we'd like to talk about digital asset market in Korea, how that can be and is interconnected with the financial market. And I'll back that up with the empirical analysis and finish off my presentation with conclusions and some of the implications. First, on the digital assets and equity market. These are being moved, and you can see the US equity market with the Bitcoin indices. You can see this in the graph, and here, though it may not be very clear, if you look at a certain points, the plummeting of the US equity market and COVID-19 outbreak and the sharp decline in Bitcoin prices, when there is a very critical moments like that, you can see that these two elements, in other words, the US equity market and the Bitcoin, have really come together and being synced in some of the ways. These are also replicating the Korean market as well. You may not be able to see that with the graph only, but I can point these out, and in some very turning points of the financial markets, there are correlations. And I wanted to also give you some more information before the pandemic and after the pandemic. So 2020, January will be really the turning point, and let's look at how these two compare with one another. And you can see with these numbers that these two markets are really correlated, and these numbers can give you some ideas. First, on the price correlations. Price here means the indexes. And if you look at on the left, that's on the top is the Korea and bottom is the USA. And Bitcoin and the KOSPI, it's about 20%. And after the pandemic, that number goes up to 80%. So more higher correlation. Same thing goes for the USA. Before the pandemic, the correlation was about 60%, but that number goes up to 80%. Correlation does not necessarily mean causal relations. They're actually quite not related, but I can tell you that with the empirical studies later, I do have other methodologies like the vector way, VAR, and we can see the impact. So right now, let's just look at the price correlations, not the causal relations. Now, that was for price. Next, moving on the return, so yields basically. Same thing here in the United States. The Bitcoin S&P relations was about 55% before the pandemic. That number goes up to about 40%, all the way to 40%. You can see that that is a very high correlations of the return. The story is slightly different in the Korean market, but you can see there's a steady growth up. And if you look at the volatility, you can see my message even clearly. usually when you look at the spillover, it's clearly evident in the volatility. So let's look at the slide. Before the pandemic, the Bitcoin and KOSPI, it was about 0.8%, basically meager or non-existent relations. But after the pandemic, that number goes all the way up to 34%, very significant. Same thing in the USA. Before the pandemic, the volatility correlations was about 9%, but you can see that has gone up to 40% after the pandemic. So, moving on to the second topic of my presentation, there are various channels where the digital assets can go all the way and have an impact to the financial stability of the overall market. And you can see since the 2020 January that volatility or the return correlations have gone up extremely. So for volatility and returns, when these correlations go up, how does that threaten or impact the system of itself? And what are the channels? So let's look at them. I believe there are four that can be summarized. Number one, well, in fact, I didn't make this up. There are some data that are being provided from the BIS and other institutions. I thought I'd bring them up. Number one is the financial institutions' direct and indirect exposure to digital assets. That this is one channel. And second is the wealth effect. Number three, confidence effect. And number four, implication effect of stable coins. Let me get into details. Number one, the financial institutions' exposure to digital assets. That could be the direct holdings or even the digital asset issuance. That'll be the digital direct exposure. As for the indirect exposure, that could be credit, giving out the credits or loans to digital asset investors, or buying some shares or the equities of digital asset trading platforms, providing digital asset investment services. If these both direct or indirect go up, then it means that the banks and the other institutions are significantly exposed to digital assets and their prices plummet. The institutions may face substantial costs related to reputational damages. Also, in case of the margin call request, they may be able to sell a massive amount of stocks and bonds, and that can raise the price volatility of other financial markets. Number two is the wealth effect. High price volatility of the digital asset magnifies the market risk and increases investors' capital losses. Number three would be confidence effect. When there is an absence of the proper investor protection measures and there is a lack of understanding of the financial assets, then it can really have a bad impact to the market confidence overall. And as for the stable coin, you know about this Terra issue, and there are stronger regulations than before. Now, unlike other digital assets, stablecoins are directly related to financial system through reserves. So the liquidation of the backed assets to cover substantial redemptions could amplify the systemic risks. Now, let's look at the situation specifically in Korea at a glance. For the Korean digital market, especially compared to the overall, it's only about 2%, roughly 2% of the combined market cap of the KRX listed companies. However, if you look at the daily average trading value, that takes up about half of the Korean stock market transaction. And if you look at the daily average trading value or the number of users, it's quite a lot, not something that should be overlooked. And I'm just going to skip that slide due to the time constraint. Next, let's talk more about the financial institutions' exposure effect to digital assets. In 2017 December, the government announced that the Korean financial institutions cannot buy or directly hold crypto assets. Now, so because of that, there are almost non-existent direct exposure of the financial institutions here in Korea. But there are indirect exposures, for example, the loans, but they're still very minimal. However, for digital assets, we are seeing these industry going really exploding, and I believe that the exposures are likely to go up as we go down the road. And if you can see, a lot of banks are really trying to open up the crypto asset custody services, and some have already made forays into that. And there's a lot of interest about taking over some of the equities of the crypto asset companies. Now, on the wealth effect, in fact, again, this is very minimal. The proportion of the crypto asset in households' financial assets is about 1%. However, also we need to bring attention that 55% of the consumers are in their 20s and 30s who have a very weak financial potential. If something goes wrong, this can be a very broad social problem. Again, the demographics show you that about 54% of the individual investors are in their 20s and 30s. And there are some crime and the damages that have caused out of the financial digital asset related crimes, and that value is over 3 trillion won. That is the reported amount of the digital asset related crimes, and therefore the protection of the investors must be strengthened going forward. So digital asset and financial markets are related, obviously. We wanted to back that up with our empirical studies. And we used the IMF's Terra IR, and that is the one that we had benchmarked. It is the scholar's name, and he had research on the spillover effect of this topic. And we wanted to apply that into the Korean market. And as for the methodologies, you just can read the slide. It's a VAR model. Let me get to the conclusion or the findings of this. In the LIAR, that was the researcher that I mentioned, the baseline model was used, and it was in the United States. The return, as for the returns, before the 2020, so up until 2019, the Bitcoin had only 0.4% impact to the S&P, but that number goes up to 10%, so 25 times increase after the pandemic. If you look at the volatility, I did the same thing in Korea. In Korea, before the pandemic, that was 0.13, but that number raises about 7 times to 0.8. Next, out of 100 working days, we looked at the rolling return spillovers, and you can see the return spillovers has really expanded, not just in Korea, but also in Korea as well. You can kind of get an idea at a glance that this graph has certain patterns. And when we say risks, volatility is a very important factor. And if you look at the spillover of the volatility, so that will be here B, you can see if it's only one before the pandemic from the S&P and the Bitcoin of the returns, you can see that number has really has gone up. So after the pandemic, these two markets have been exposed to more spillover effects. Same thing, but applying to Korea, number goes from all the way to 7. That's a 6-fold increase from before the pandemic. And compared to the United States, the absolute value may be smaller in Korea, but again, for the returns and volatility spillovers, it's clear that we are seeing greater impact, greater volatility and return spillovers in Korea as well. Sorry, I missed out on the slide. That's the case in the US of the volatility spillover. You can see how that has changed before and after the pandemic. Same thing here in Korea. You can clearly see that the volatilities and the risks have gone up. So that would be my conclusion. Just like in the United States, the interconnectedness between the Korean equity market and digital asset market in Korea significantly surged after the onset of the COVID-19. Of course, it does not increase as much as the US market. You can see in US it's like about 10% or even more. However, the spillover between two markets are about, only about 0 or 2% before the pandemic, extremely minimal. But after the pandemic, it surges to 3 to 8%. So that's a significant increase that we need to pay attention to. Now, the interconnectedness in Korean market is characterized by the spike after 2021. And also now, another conclusion and implications. To mitigate systemic risk triggered by digital assets, continuous monitoring is needed over digital asset holding, and related policies need to be improved. Government must supervise the financial health of the financial institutions by overseeing the leveraged investment on digital assets. Also, close monitoring is required over digital asset holding by households and companies in terms of their volume and portfolio. To resolve asymmetric information problems, investor protection measures should be made by, for example, publishing white papers or liabilities for the damages, and also right of recourse may be a way to help the investors. And when it comes to listing and delisting, you have to unify the regulations on this and also have a regular evaluation monitoring and have a preemptive measures before problems like the coin runs. Especially for stable coins, this has a wider impact to the financial market. So strict monitoring of these kind of coins and making related laws are necessary. For example, when it comes to reserve assets. If you look at the EU, if the financial institutions do own those, then the weighted average of the risk goes up to about 1,200%. So that's a weighted average on holding these assets. So financial institutions are discouraged to own the cryptocurrencies, crypto assets. I think here in Korea, maybe not that number of the EU, but we do need to find measures to also have a clear awareness of the risks involved in owning and holding the crypto assets. Probably need to have a more conservative approach to this, and that will require certain regulations. And if you look at the Korean market, only digital assets and financial market, especially the crypto assets, don't have a strong or direct relations. But that is only because we had a very strong regulations, and also because we didn't officially or strongly promote this particular sector or the segment. But with the NFT and the metaverse and many other digital assets becoming more promoted, the risks are only going to be expanded. And if we were to do the similar studies later, we may have the same kind of spillover numbers like the United States. So we need to have a preemptive measure. So that's all. Thank you very much.
예, 감사합니다.
Thank you. Moving on to the next presentation.
선영 교수.
We will hear from Professor Park Sun-young from Dongguk University. The topic of her presentation is Tasks to Protect Digital Asset Investor. Please welcome her with a big round of applause.
이게 정방향이고 이게 역방향으로 해주시면 되고요.
네. 네. 안녕하세요.
Good morning. Thank you for inviting me to Korea Fintech Week 2022. I would like to especially thank the FSC as well as all the presenters and discussants for this seminar. Now, I decided to start doing my research on digital asset because of fintech. So I believe it's very meaningful that I'm taking part here today. So back in 2018, I was just a researcher who researched on fintech. And it was because of those opportunities that I am able to stand here as a presenter for this seminar. So I was a professor at the industry engineering department for 7 years, and I'm a millennial myself, so I really wish for the success of blockchain. Nevertheless, on official settings, I continue to make the requests that the government take measures to protect investors, and I sometimes feel bad for making those requests because I know that circumstances are tough for the government. And I'm not sure at times whether those requests are really for the blockchain environment overall. So I always try to make my request based on countless research outcomes. Now, this is the storyline of my presentation. As you already know, the digital asset market regulations are becoming concretized in the global market. So 2 weeks ago, the report on Biden's Executive Order 14067 was published, and I would like to talk about the risks outlined in that report briefly in my presentation. And secondly, the Korean digital asset market is very important in the global arena. And from a macro and micro perspective, it has some uniqueness, and I'd like to talk about that based on some statistics. Lastly, due to these unique characteristics, in Korea, we need to think about the priorities to protect Korean investors and other investors as well. So I would like to conclude my presentation by talking about that. So there are many hearings and events of the sort for digital asset regulation. This is indeed a very heatedly debated topic today. But I believe we have difficulties in reaching regulatory agreements because of three things. One is that there's a knowledge gap between the participants because technology is changing so fast, and the ecosystem is changing very fast as well, because there is a difference in the level of knowledge that these stakeholders have. They can't help but to set forth different policies. And second, so there has been requests for legislations based on one's interest. And lastly, there's still uncertainty when it comes to the potential and prospect of blockchain, and therefore, regulatory authorities are very cautious to take that first step. The purpose of my presentation is to address the knowledge gap and update gap. By narrowing those gaps, perhaps we can reach a faster social agreement on regulations. Now, the framework of digital asset use can be divided largely into two. There's one on the ecosystem and infrastructure, and application to existing services. As for the ecosystem itself, there's layer one like Ethereum, and Dpts that operates underneath, and DAO, organizations like DAO, and infrastructure like Oracle, and data aggregators, and so on. And as for Dpts, which we see the most frequently, it's a service. It's kind of like a coupon, I guess, which allows you to use the services provided by the initial startups on blockchain. And with regards to application to existing services, you know CBDC and STO, those are two great examples. So blockchain actually changes assets like email. That's its technical advantage. And CBDC and STO takes advantage of that. So like creating an email address, this is very easy. And remittance of assets to overseas is very cheap and fast, easy, just as you're sending an email to a friend. So the existing players have done a lot of research to take advantage of this technology. And when the second part is actually realized, we will see some great impacts on national economies of many countries. However, I would like to talk about the ecosystem and the infrastructure rather than the second one, the application. Now, these are the key areas of regulator focus. There are 5 of them. One is financial stability, which Mr. or Professor Lee talked about. Next, industry promotion and support. That will be talked about by Professor Peter in the third presentation. And third, anti-money laundering and KYC. That's being done very well in Korea. And tax, that's also being researched by other institutions. So today I'd like to put focus on investor protection. Now, there have been many global discussions going on. So the Department of Treasury recently, as I said before, published a report which talked about risks. Those are conduct risk, operational risk, and crypto asset intermediation risk or custody risk. Now, conduct risk is the focus of that paper. It's not a one-off risk like fraud, theft, and mismanagement that is important, but rather it is information asymmetry and the risks that occur from that is seen as being most important in the report. And there are also information asymmetries with regards to issuers, which will be the focus of my presentation. I would like to talk about three. One is the principle of suitability. So usually, investment companies would recommend products depending on the individual's level of asset and how he or she enjoys risks and so on. But that's not the case in the crypto world. And therefore, people make risky investments and face damages. Now, second is conflict of interest. I'm sure you're very familiar about this. There's no concrete information notice about this conflict of interest. That's why investors can face damage. And third is price discovery and market manipulation. If it's a normal market, the price discovery would function under the demand and supply principle. But this market actually uses Bonto through a few wallets and sometimes inflates the price, and there's no way for us to find out. The reports say that 70% of the trade is a wash trade. And market manipulation risk is really important for the Korea market. That will also be another focus of my presentation. Now, let me talk about the Korean market. Now, in the digital asset arena, the Korean market definitely has a global presence. If I were to talk about an example, the CEO of Binance said in an interview, quote, "There's no place that is more active than the Korean market. We recently signed a business agreement with the Busan Metropolitan Government to do business again in Korea." And the Korean market is a CFI-centered market with only retail investors. Thus, it has a very unique characteristics in terms of both micro and macro. And the regulatory authorities have piled up enough data and understanding of this market that it successfully, for the first time in the world, implemented travel rules. So the Korean market is very important, and the regulation authorities are doing a fine job of implementing some of the related rules that I'm sure that we have something to contribute to the global market. Now, the FIU last Tuesday announced these first half statistics of 2022. Now, the market value is 23 trillion won, and investment deposit is 5.9 trillion won. Daily average transaction is 5.3 trillion won. And KYC users are 6.9 million won. So from a macro perspective, it's very large. And 638 digital assets are listed. Among them, 391 is single listed, and 241 of them are issued in Korea. Now, let's compare that with the 2021 second half report. So the market value held by Korean investors actually decreased by 58%. That's 32.2 trillion won in value. And also average daily transaction fell by 6 trillion won. But price volatility increased by 8 percentage points. But KYC users actually increased by 1.3 million won. Now, if you look at the number of new listing and delisting, the new listing is more than 140, which means that the structure in which the digital assets are listed probably would have changed greatly as well. As I said before, 61% of the assets traded in Korea are single listed. They're listed solely. However, they account for 23% for top 5 exchanges and 36% for coin market exchanges, which is rather low. And 85% of single-listed digital assets are under 10 billion Korean won, and 36% of them are under 100 million Korean won. Now, let me talk about the characteristics of Korean-issued digital assets. And this is the outcome of the research that I conducted in summer last year. I conducted this research before FIU report was issued. And I looked at the data of digital assets in 4 top exchanges in Korea. And similar to the FIU report, I could find out through my research that about 1/3 of the DA or digital asset listed and traded in Korea are issued by Koreans. And we can see that if you look at these tokens, more than 70% of them are Ethereum tokens. If you look at the Korean-issued tokens, there's 80.5% when it comes to transaction of 20% or more on a single exchange. But only 18.8% of transactions occur on a single exchange. So you can say that this is significantly lower than that of digital assets issued by Koreans at 80.5%. And this is the 24-hour volume divided by market cap. And the fact that this is greater than 1 means that it's very ideal. But about 10% of the Korean market showed a figure greater than 1. But the maximum point for foreign companies or foreign market was actually 3.5. So you will see that if the market cap is about 3 trillion Korean won, then the daily average volume is about 4,500 trillion won, which is very strange. I know that. And if I were to look at some tasks to protect digital asset investors, we have registered VASP for AML, and we have also, due to Terra and Luna collapse, put pressures on SROs. Now, I've been looking at these distribution data on a daily basis, and after these 2 incidents, though not satisfactory, the data has improved quite significantly. Now, legislation has to happen at an equal speed with the international community. But at the time being, we need to strengthen the industry's self-regulatory efforts. And the focus of what I want to say today is that among that 7 self-regulatory efforts, it is really the market that needs to play a key role. And also, market monitoring is important. Now, the digital assets can be divided into 5 when it comes to market monitoring. Now, let's take a look at number 5. There is Sellet Plus, which is listed on single domestic exchange. And number 4, where global multiple domestic Seoul listing is being implemented, which is like Tokamak network markets and so on. Now, with regards to Sellet Plus, it cannot help but to depend on the solely on market monitoring. But because this is largely dependent on fees, when it comes to single-listed assets, how can we push forward the regulations? That's a big homework for us. Now, let's take a look at this picture. Now, these 5 exchanges have different assets being exchanged, and I told you that they account for about 60% of the market. Now, this data of these 60% is owned only by the individual exchanges, and it's in black box. So we don't know from the outside who the decision makers are. And that's the biggest vulnerability here in Korea. And to protect investors, we have to put this as a priority. Now, this is the conclusion. Now, I believe that the legislation has to be technologically neutral, and the operation has to be flexible, and it has to be consistent with the international norm. And this has to be done in tandem with self-regulatory efforts for market monitoring and industry efforts to demonstrate concrete, tangible, and responsible innovation. Now, in the report, yet to materialize or yet to be realized are two of the most frequently used phrases. And this means that the possibilities that was promised by blockchain was not yet realized. And therefore, to create a sustainable blockchain ecosystem, we have to think about ways to raise the autonomy of the ecosystem at the same time, put proper regulations in place. Thank you very much for that presentation.
Next presenter is Professor In-ho from Korea University. He's going to talk about the digital asset revolution and the task to foster the ecosystem. Please give him a warm hand. Hello, everyone. Great to meet you all. From Korea University, I am Professor In-ho at Computer Science Department. It's a great honor to be here, and I'm very thankful for the invitation and would like to thank all the organizers and our moderator as well. I am a computer scientist, and the digital technology is something that I am very much keen on, and I'm also looking forward to finding out what that's going to impact, how that's going to impact our financial system overall. So the finance itself is a global industry, and as it is being formed that way, we need to also look at what we can do in the future to be able to become have a leadership in the global financial landscape. So I have been working as a director, and I also am in the working in collaboration with the FSCs and other authorities in the financial sector. I've learned so much from those different experiences. And what I would tell you is that the analog money that has become transformed into the digital money. So that's really a digital transformation itself. What I'm saying is that the papers that we had, the analog money, if you had to go to a transfer or send it to somewhere, you had to go to the banks as a way for the transaction. However, with the digital money, and Professor Park beautifully described this, but now you have the KakaoTalk platform or any other digital platforms. You can just simply click a few things on your mobile, and without any intermediaries, you can simply send that money digitally and virtually. And that was the Bitcoin that first initiated this. So I have four, I believe, of digital money. Number one was that computer as the issuing body is the Bitcoin. Number two is the corporations issuing the money, and that is Libra. And unfortunately, it wasn't successful in terms of the issuance, but I think many other companies are now they're issuing tokens from that initiative, and digital money from government, the state level. So that could be digital yuan or digital won, a digital dollar, and etc. as we go down the road. And individual level issuance, and that, for example, would be the NFTs. So each stakeholder or the issuing body was mentioned, and I believe with those diversity, we're going to see even more digital money coming out of this, and we need to find a way to create an ecosystem, find the measures to respond to this. That way, we can minimize the negative impact while expanding and maximizing the impact that are positive. So the digital transformation that I mentioned, you know of this company, the camera company Kodak, from film company. You know the history of this, and they had to reduce their employee by 90% almost within just 10 years. And I think Kodak is a great example of what happens if you don't adapt well to the digital transformation. Even if the company has a history of 120 years, even if you have 150,000 employees, no matter how strong your legacy was, if you don't adapt quickly and effectively to the digital transformation, you will just go into the history. You can just disappear in a few years or months, and that newly emerging market will be overtaken by somebody else. Naver has done a good job, but in many other countries, Google has really overtaken the entire search market, except for Korea with the strong foothold of Naver. And you know that basically all my movements and every data is going to go to Google. Now, when it comes to our money and real estate, the registers, all that assets on the digital markets may become just owned by a certain few players like Google, but we only have 15 minutes to decide if you want to give that leadership to this global company or you want to keep it yourself. Just like Sony, just like the Kodak examples, we only have 15 years left to decide the leadership in the global financial market. Now, I think right now you can go to the global market and become the global leaders, just like Samsung has done. So I think we have the potential that we can unleash if we properly act upon this. And beyond tokens or coins, I think we want to talk of more encompassing concept like the digital asset. Digital assets mean is that data in files and something that has a meaningful. For example, a photo with my grandma who passed away 30 years ago. A photo with her when she was alive is a very important digital asset for me. And because of that importance, digital file is basically a copy of it, and it's not the original, but if you put it on the blockchain, this becomes the only original file. Once you have that originality and the uniqueness to it, then it has the value which can be traded in the markets as a digital asset. So this is a completely new idea that we've introduced in the digital market. A blockchain, when it's combined with the ownership idea and when it has the value, then the issuance and the transaction, storing, intermediary, search, and all the other operations can be put on top of this. So what can be digital assets? It could be music, movie, letters, advertising, novel, game, money, anything, you name it. Anything that you can express on the computer space can become digital assets. Next, Web 4.0 is the buzzword. When it was Web 1.0, it was Microsoft. It took 40 years for them to have a certain milestone, and Google only required 20 years. Now in 4.0, with the blockchain-based, like the Bitcoin, it only takes 10 years. That means the frequency or the time required to reach the certain same milestone has really been reduced. Also, this makes it away with the intermediaries. There's no need for the intermediaries in the middle, which means that there's a higher trust and also lower cost involved in it. So basically, it's a banking without banks that has become possible, and it was allowed and made possible with the DeFi or decentralized finance. Of course, the Luna and Terra are some of the very important problems that we had to address, and that shows just how we don't have the ecosystem to back it up. And number three, the third buzzword is that we have the security token, so STO, with the real economy values as a collateral. For example, the real estates. You can simply have just a little token and have it as a collateral of the buildings or the real estates, and you can get the dividends out of it and sell it at any time. And for NFT, it's like an artwork that cannot be exchanged one-on-one. And digital ownership is put in a form of a token, just like the register of a real estate. If you look at the register of a real estate, there's an address, and in that address, whether, for example, this is a one-story building or five-story building, same thing here at the token. You can have an address here, It's probably blurry to you, but here's an address and only the very original that are located right here. That image is the original and that has the ownership. And there's a code to this, and whenever there is a change of that ownership, it's written and recorded in the blockchain, just like how you will see in the paper register of the real estate that you own. So, and you know the avatars in Metaverse, you could apply this NFT concept to the bag or the clothes or the land, anything, and will be basically shown in the format of the NFT. And in this new world, this is a completely new capitalism, basically. And that the size is, it will be about 900 trillion Korean won in a next few years. So here you can sell artworks, music, novel, anything of that sort. And basically this is a combination or convergence of the virtual and the real economy. And this creates, of course, many new different job opportunities. And let's say, why would people buy the land or territory in a metaverse? Because there's an opportunities for advertising, and that is one reason that you will buy that land or territory. That particular land piece can be very important in the metaverse world. Not only that, rights can also become the digital assets. For example, and let's say in the LA, there is a Long Beach, right? And there's a container, the right to use the container and transport to the Long Beach. And that particular right can become a digital right, digital asset. So it's a logistical asset in the digital format. Also, the bond can become a digital token. And what that means is that basically any rights around the world, like stock is a right, right? And that kind of different rights can be tokenized and be liquidified around the world. So this is a market in and of itself of a big size. And I believe that age has already been ushered. And also, like for example, the direction I'm heading to, or a great restaurants for the date with the dates, and even that information. Once you get that like clicks, then in digital 4.0, that ownership of the knowledge of which restaurant is best place to have a date, that can also be a digital asset, and you can make money out of it. For example, your own data is now something that you can claim your own rights, and that can be a source of money. And that's basically the idea of how we're seeing the transformation into the digital asset. So this is the basic overall ecosystem that I've tried to describe to you. And in that big picture, we need to identify what regulations, what policies will need to be established. Number one is digital wallet. Basically, 7.5 billion world population are there. And how many of those people do you want to see the digital wallet is installed in their computer or mobile? And also next will be the digital asset bank. So the wallet and the bank, the number of the wallet decides how many installations will be made, and that also shows how many tokens or how many types of the tokens can be created or should be created. So that's number one. For example, Samsung Electronics they still manufacture mobiles, right? And on that mobile devices, if the digital wallets are installed in each one of them, then the digital wallet industry will be created. And on the very right side of the slide, you can see that, for example, the tokens such as Bitcoins are there, but that can also be the real economy properties, or there could be the rights like the NFT, or data that can be the asset. And you can, if you put that all, place it on the exchanges, then that will be the values in that way. But for example, if this becomes a collateral, just like a stock collateral exchanges, then you will need the payment, the transmissions, and the credit ratings. And all of that means that it's basically becoming a bank for digital asset. And this is globally operational, like right now. So whoever leads that digital asset bank basically the global assets will be handled or managed by that country. Of course, the size of it is important, but what's most critical is the speed at which you move. So right now in Korea, the Korean people and Korean industries, companies, we are basically number one when it comes to speed. We're very well equipped to take on this challenge. So I think we already have the fundamentals for this, and we're ready to take this on. And as Professor Park just mentioned, the exchanges, there are sometimes the potentials for conflict of interest. Therefore, like on the right side, the ratings companies must be established so that they have an objective perspective instead of the exchanges who may face the conflict of interest. So that's number 4. So going forward, all the stocks, it's basically the ownership, piece of ownership to companies, right? And that can be tokenized and can be distributed. I believe that'll be the mega trend going down the road. And also the real estate, even the minerals, the crude oils, all of those can be tokenized. In other words, become digital assets or assetized. And also the intangible assets like data, IP, content, game items, securities, and documents, all these rights that are not tangible can be assetized and become liquidated in the global markets. And I believe that digital asset can take up about 10% of the global GDP. That is the forecast. And for this to happen and to have the strong side of it, we need to make sure that we bring efficiency and the speed to this to bring in more consumers and users of this. And for example, in the real estate, even if it's like $1 trillion, even if you have just $1, you can be part of that. And that also can address the equity or address the inequality of the wealth around the world that has been perennial problems. And also by liquidating non-liquidable assets, you can also add efficiency and value to this. And number 4, digitals are great because they are programmable, and all the records can be put in the blockchain and everybody can see it, which means there's a higher level of transparency. So the analog assets compared to this analog, the digital, are more efficient, more competitive. And I told you, Professor Park mentioned the Biden's executive order, and one of the gist of it is the protection of the consumer, investor, and the companies. The other point was the safe and cost-effective use of the financial services. So basically, the U.S. government recognized of it. And as a payment provider, in the U.S., people still use checks. Takes long times, and there's a lot of accidents involved with it. But with the digital assets, that inefficiency can be reduced. And also, number 3 is the financial stability. And the first presenter, I believe, mentioned this already. And number 4 is the responsible innovation. And we definitely need to develop the agenda for digital asset research and development. And the United States can share the examples of their cases, and they are going to provide the guidelines and best practices that was mentioned by the Biden's executive order. This also means a nod to what has happened in the digital market, and that the U.S. is committed to providing the support and the policies to support this. What that suggests is that global financial leadership and competitiveness are the main keywords of the Biden's administration. What this suggests to us is that we need to definitely follow suit. We don't want to be lagging behind too much. So Korean government will need to also find ways to have that global leadership on the digital asset and work closely with the American government so that we can foster our companies here in Korea with the right institutions and policies. Of course, the consumer protection and investor protection is a must. Make sure that the illegal activities are eliminated and are prevent in the first place, and also with the rounds of the testings that are necessary, we need to also start at the same time with the US so that we don't lag behind. So I'm thinking personally, Koreans have the potentials that can be unleashed. And I believe we can definitely become G2 when it comes to digital economy. This will require the division or the separation of the regulation and promotion. For example, we can have one division dedicated for digital industry promotion and the other for the regulation, because these are two separate things, and some FSC may not be able to deal with the banks or deal with the tokenization of the rights. This could be rights of the artwork. This could be maybe, for example, the Ministry of SME or Ministry of Culture. They are the right ministries that can deal with certain parts of the digital assets, for example, like the artwork NFT, not necessarily the NFC. And also, we believe that we need to have the legislation, the Basic Framework Act for the digital asset. And for that, I guess the regulating authorities, with the separation, we also need to have the right manpower for this. Also, ICO is one big issue. Definitely need to permit the ICOs, but with the safety measures to safeguard our investors. And number 4 is the NFT. NFT must have its own category, and the regular therefore, the NFT should be, in a way, safeguarded by being tested in advance without its spillover impact to other financial institutions or the markets. And also, it's too early to regulate, and we need to see where this is going, and we need to monitor so we can maybe remove the regulatory sandbars, because the sandbars is really too slow and it's not effective. In fact, a lot of times it's hampering the development of certain industries. So what I suggest is to have a negative regulation list. So let them do whatever, but after a certain threshold, the size of it or the timing of it, they will be part of the regulation sandbox. So I think instead of the positive regulation, we need to switch over to the negative regulation method. So that's all that I have for you. I believe that with the digital technologies, all the assets or the industries in the analog will be transformed into the digital, and I would to have the leadership in that. Thank you very much, everyone. Thank you very much, Professor.
Next, we will hear from Ms. Lee Tuong Lee, who is the Assistant Managing Director at the Monetary Authority of Singapore. The topic of the presentation is developing an innovative and responsible digital asset ecosystem. Please welcome her with a big round of applause.
Good morning, Mr. Jong-Kyu Park, President of the KIF. Ladies and gentlemen, very good morning to all of you. I'm extremely honored to speak at the KIF seminar as part of the Korean Fintech Week 2022. My name is Lim Tuong Lee. I'm the Assistant Managing Director of the Capital Markets Group from the Monetary Authority of Singapore. And my group at the MES regulates and supervises capital markets. I also chair the IOSCO Fintech Task Force, which was recently formed in March this year. So today I will be sharing on MES's vision around developing an innovative and responsible digital asset ecosystem. I will cover 3 broad areas in my presentation today. First, what is our strategy in developing a digital asset ecosystem in Singapore? Second, how we are regulating digital assets and the related activities. Finally, what are some of the additional considerations that we are looking for strengthening our regulatory framework? I will first start with our development strategy. I would like to highlight that the term digital asset is a very broad one. Professor In Ho has a much broader definition for digital assets, but the major types that we see from our perspective are as follows. First, you can see cryptocurrencies and stablecoins. These have been in the news lately, and we all know why. And the term digital assets also includes tokenized financial assets and tokenized real economy assets. So in MES, we adopt different stances towards the different type of digital assets, which I'll elaborate in a bit. So around these various type of digital assets, we have a digital asset ecosystem comprising a mix of different players providing different services such as trading, custody, compliance, and security, and so on. So MES adopts a four-pronged approach to this. First, we would like to explore the potential of distributed ledger technology, or DLT. Second, we look towards supporting the tokenization of assets, something that Professor Inho has talked about as well. Third, to enable digital currency connectivity. And fourth, how we can anchor strong players with good value propositions and risk management capability. Now, looking at the first prong of exploring the potential of DLT, so we have identified that the most promising use cases are actually in cross-border payments and settlement, trade finance, pre- and post-trade capital market activities. Now, some of our private sector participants have started experimenting with using DLT to tokenize assets, which then reduces the time to clear and settle securities transactions from days to just minutes. Right, this brings me to the second prong of supporting tokenization of financial assets and real economy assets. So tokenization allows for the rights of assets to be represented digitally on a blockchain or DLT, and this enhances the ease with which transactions can take place through a web interface. In addition, tokenization enables fractionalization, where you can cut the asset into small little bits, and this can help to enhance market liquidity. Moving on to the third prong, our strategy on digital currency connectivity is such that we believe that the digital asset ecosystem needs a medium of exchange to facilitate transactions. So within the ecosystem, there are three candidates for this digital currency connectivity. First, we have what you call cryptocurrencies that we just talked about. Our view is that cryptocurrencies that are unbacked by any assets are not suitable as a form of exchange or medium of exchange, because they are highly volatile and highly hazardous, particularly for retail investors. They are highly volatile. They are not backed by any intrinsic value. So we don't think they are suitable. Next, next possibility is stablecoins. We think that there's more potential there, because if they are securely backed, they are backed by high quality reserves and are well regulated, there's potential for stablecoin to play this role of a medium of exchange. Thirdly, we think that wholesale CBDCs could have a role in facilitating cross-border payments and settlement in the digital asset ecosystem. So I'm talking about a wholesale CBDCs. Retail CBDCs in Singapore, we think that there's less of a use case, because retail payment rails are already very efficient. So we don't think that a retail use case is strong, but we think wholesale CBDC is a very strong value proposition. Last but not least, for our last prong, we hope to be able to anchor strong industry players who can contribute meaningfully to the digital asset ecosystem. They must also possess strong risk management capabilities, because these players provide a wide range of activities that could go towards building up an ecosystem. So we want good, strong players who bring both innovation and strong risk management. So like all innovation, digital asset activities pose both risks as well as benefits. So this brings me to the regulatory aspect of our vision. So essentially, we adopt a technology-neutral approach to regulate digital assets and their related activities. This means that we look through to the underlying characteristics of a digital asset to determine how it is to be regulated, regardless of its use of technology. So this is similar to the approach in most jurisdictions. To elaborate further, for instance, should a digital asset have a characteristic of a capital market product, that it should be regulated under the Securities Futures Act. So for example, if it's like an equity or a debt instrument or what we call a collective investment scheme, we will impose the same type of prospectus licensing and business conduct requirements. On the other hand, digital asset may actually meet the characteristics of what we call a digital payment token. Then this comes under the Payment Services Act. So what are DPTs, or digital payment tokens? They are essentially those that are intended to be used as a form of payment or a medium of exchange. We commonly know them as cryptocurrencies. I mentioned this earlier. And the buying and selling of DPTs and the facilitation of exchange of DPTs are regulated under the Payment Services Act. Currently, it's primarily for anti-money laundering and terrorist financing risks, as well as tech and cybersecurity risks, which I will touch a bit on later. So on this slide, we look at our 4 key risks that we focus on. First, in combating money laundering and terrorism financing risks. Second, technology and cyber-related risks. Third, safeguarding against consumer harm. Professor Sogong has also shared a bit about consumer harm and investor protection. Finally, mitigating potential financial stability risks. So Professor Lee has also talked about that. In the next couple of slides, I will give a broad overview of each of these risks and what are we doing to address them. So in the early days of regulating DPT service providers, we feel that MLTF risks are the highest and greatest importance, given that they're primarily used for crypto. Crypto is as a means of payment to enable transfers across borders. This makes it difficult for law enforcement to identify a person behind these transactions. So our focus was mainly AML CFT risks. So early in 2020, we imposed on providers of digital asset services the same AML and CFT requirements that apply to other FIs. So Singapore's requirements are also consistent with international standards, namely those of the Financial Action Task Force, or FATF. So earlier this year, these rules were expanded to include Singapore incorporated entities that do not conduct activity here, but in Singapore, but provide digital asset services overseas. This is to facilitate implementation of the travel rule. On the right-hand side of the slide, we have technology and cybersecurity risks, which is another area where we feel that regulatory requirements are important. Digital asset services are by design technology enabled, and it makes it more crucial that the tech risks are properly managed. So DPT service providers are expected to comply with the same cyber hygiene standards and technology risk management principles that we expect of other financial institutions. So, but we do know that technology and cyber risks continue to evolve. For example, we see coding bugs in smart contracts, compromise of digital token wallets, or theft of encryption keys. So we need to ensure that management of such risks are properly done. Otherwise, it will expose consumers to additional harm or risk of loss. Now, cryptocurrencies are in the nation space. However, we must also still look at how we can reduce harm to consumers, which was presented earlier by Professor Park as well. So there are many underlying issues which can come under the umbrella of consumer harm. So we need to look further into this. So there are 2 primary angles that we can look at. One is how to put in retail safeguards, and the other one is about market integrity. So due to the high volatility of cryptocurrencies, as we talked about just now, we need to make sure that there are safeguards against consumer harm, because consumers may not be actually fully aware of the risks that they are getting into. As we mentioned earlier, there are potential for misconduct against by digital asset service providers. The consumers may not know that there are some vulnerability within the code as well. So many cryptocurrencies that are traded could also potentially be manipulated by certain parties for their own personal gain. We'll talk about fraudulent schemes such as pump and dump schemes, rug pulls, wash trading, which unfortunately, based on data, shows that 70% of trading value are wash trades. So they compound the inherent volatility and speculative nature of crypto assets and can severely harm consumers. So the global and 24/7 nature of cryptocurrency markets also pose practical difficulty for any particular jurisdiction seeking to identify and weed out any manipulative practices. As such, we require a multi-pronged approach to this. First, global cooperation is vital to minimize regulatory arbitrage. So MES is actively involved in international regulatory reviews to enhance market integrity and consumer protection in the digital asset space. Second, industry has an important role to play as well. Professor Park talked about working with industry to create sensible measures to protect consumer interests. So MES has also shared our concerns with the industry and have invited them for views on possible measures to minimize harm to consumers. As we speak, we are actually targeting to publish a more formal consultation on user protection safeguards next month in October. Finally, consumers must also take responsibility and exercise judgment and caution. No amount of regulation and global cooperation or industry safeguards will protect consumers from losses if they do not take ownership or if they do not conduct their own due diligence. Actually, MES has issued quite a number of advisories since 2017 to warn the public of risks of trading cryptocurrencies as investment products. So earlier this year, we went a step further to limit the type of advertising that can be done on cryptocurrencies and also remove what we call physical ATMs from public areas, as they can actually facilitate too much public access to such services. So we also have increased our efforts in education to narrow the gap. Earlier, there was a talk about knowledge gap, to make sure that investors actually know what they're investing in, and to give them a bit more knowledge to understand what they're investing in. So last but not least, I'll briefly talk about financial stability. Professor Taiki Lee has talked about this. So looking at this chart, the market, you can see the market value of world crypto assets has actually fallen from 3 trillion earlier in November 2021 to about 1 trillion in June 2022. This was before this, there was a big run-up just before that. So, right now the global market cap has remained at about $1 trillion. So there are two perspectives that we can draw about this contagion. First, there is quite a lot of interconnectedness within the crypto system. So when Terra USD stablecoin collapsed, we can see a lot of knock-on effects on many digital asset providers, and some have had to close down. So within the crypto asset system, there is a lot of interconnectedness and interlinkages. However, while there is some correlation between traditional asset market prices and crypto assets, the volatility in the crypto market has had so far minimal impact on financial stability. So suggesting that the linkages between the digital asset sector and traditional financial sector remain limited. However, we cannot take this for granted, because as the digital asset system grows, it will be natural for linkages to take place, and we need to make sure that we keep track of them. And Professor Lee has also said that we should continue to monitor closely the developments in this area. So now let me talk about the measures that we would potentially consider to regulate, to enhance our regulatory framework. So our proposed regulatory measures that we are thinking of focus on three key elements, namely limiting harm to consumers, providing more clarity on stablecoins, and also financial stability concerns that I just talked about. Firstly, as mentioned, we will be issuing a public consultation in October on user protection safeguards. For instance, we are looking at considering restrictions on providing leverage and credit facilities for cryptocurrency trading and investing. We may also be looking at consumer risk awareness assessments. Secondly, we are also targeting to consult on measures to uphold the promise of stablecoins next month. Whether stablecoins are really stable, that is the big question. So I mentioned earlier that stablecoins provide a good potential as a medium of exchange within the digital asset ecosystem. However, they can only do so if they are securely backed by high quality reserves and if they are well regulated. So we will be considering additional requirements such as strong and secure asset backing. At the same time, looking at timely redemption at par, for instance. So like I mentioned earlier about financial stability concerns, so we will continue to watch out for financial stability implications. We have been collecting data from our financial institutions to understand their exposures to digital assets and what are some of the operational arrangements that they have put in place. So data alone is not sufficient, however, we got to start thinking about what are some of the policy decisions or regulatory decisions or implications that we need to put in place if there are financial stability implications. So this slide talks about the international work groups that we are participating in to facilitate cross-border cooperation. So as an integrated regulator, we participate in many of these work groups, which allows for cross-pollination of ideas. I also mentioned earlier that I chair the IOSCO Fintech Task Force. The mandate of the task force is to develop, oversee, and implement IOSCO's regulatory agenda with respect to fintech and crypto assets. So there are two work streams within the Fintech Task Force, one on crypto and digital assets, and another one on DeFi. So the task force targets to publish policy recommendations to address investor protection and market integrity issues before the end of 2023. So work on the task force has progressed steadily, and I will be providing further updates on the status of the work of the task force at the Singapore Fintech Festival this November. So now in conclusion, Singapore aims to be a center for innovation and responsible digital asset activity. So it is a balanced approach that we are taking to facilitate both innovation and responsible innovation and regulation. So we have the unique setup where both development and regulation are under one house. So internally we seek to find that balance to facilitate the digital asset ecosystem. I also have two links attached up there. First is a speech by MES MD, Mr. Ravi Menon, at a seminar earlier last month. You can reach the speech to find out more about our stance on digital assets. And second is a link to find out more about the upcoming Singapore Fintech Festival to be held on 2nd to 4th November. And with that, I thank you.
Thank you very much for that presentation. Now we're going to have the panel discussion, and for that we have Senior Research Fellow Mr. Lee Myung-hwan for the moderator of the panel discussion. We're going to invite the speakers, and along with that we have Mr. Kim Yong-tae from FFS and Professor Lee Han-sang from Korea University, and from Hana Institute of Finance we have Mr. Chung Jung-ho. Please welcome all of them onto the stage with a big hand. So hello everyone. I am going to be the moderator for the discussion. I'm from KIF, and my name is Lee Myung-hwal. So let's get started with the panel discussion. So we heard from three speakers today. We talked about the impact of digital asset on financial stability, and we also looked at the tasks to protect the digital asset investors, and we also looked at the digital asset revolution and tasks to foster the ecosystem, and developing an innovative and responsible digital asset ecosystem. So we heard from four speakers actually. And at this panel discussion, we're going to talk about what was mentioned during the panel discussion, during the speaker presentation. But on top of that, we can add different perspectives from the FSS and academic circles. So we can add many other topics with regard to digital asset. So for this, we have 30 minutes for the panel discussion. And for three panelists, if you can have 5 minutes. And so for this, we would like to have, not instead of alphabetical order, we would like to start from the reverse alphabetical order, in Korean alphabet, of course. So President Chung Jung-ho from Hana, and then Professor Lee Han-sang from Korea University, and then Mr. Kim Yong-tae from FSS. And then we're going to hear from the four speakers. Maybe they can answer to some of the questions raised or add their feedbacks as necessary. And then we're going to take the questions from the floor. So that's how it's going to be. So let's get started. President Chung Jung-ho from Hana Institute of Finance, please. Okay, hello. First of all, thank you very much for the great presentations that made me really delve into and think about what needs to be done. Innovation and regulation needs to be balanced out, and also responsible innovation was an issue. And I think that's very important for the digital finance. And I think the fact that we're talking about this really is a testament to the fact that digital finance has become something very meaningful to our overall society. In fact, for digital asset, we need to have the ecosystem for sure. And by function, as Professor Inho already mentioned, and I was very struck by this, the ecosystem should start with the issuance and also operation of it and the transaction. And for that ecosystem to happen, of course, there will be a lot of different aspects of the project and insurance, and all of that will be incorporated into the ecosystem, and we need to have that very big picture of it. And also with regard to this, there will be a lot of issues that we're already starting to see. But when you say digital asset, and it was mentioned in one of the presentation, I believe, and I think there are really three things that really comes to my mind. So cryptocurrency, of those, what is really important to us is the stable coins. And stablecoin is one, and number two is the tokenized securities, so tokenization basically. And as Mr. Lim Chuang Lee mentioned, financial access tokenization is one thing, and the real asset tokenization is another. So there's a securitized one and non-securitized ones. And so I think that's also one thing that we need to look into. And also, it wasn't mentioned during the presentation, but for the CBDC, that's also, I think, something that are very important. And I think for the industry to take off, the current issues are mostly about the definition of the digital assets. And for issuance, there are many important topics that we need to be dealing with. But again, for the ecosystem to be created, the operation and the consignment and overall financial services will have to be incorporated in the existing institutional framework. So I guess my question, or I guess more like something that I want to comment on, is that this digital asset ecosystem, I think one most important thing is the stable coin that will be the payment method. And the policies for the stable coins is extremely crucial. as the very beginning stage. So all the digital assets for these to be traded and used and exchanged, that means the digital payment is a prerequisite. And as mentioned by the Singaporean speaker, that is the transactional and for the trade and also in the equity markets. And again, they are very important method. And in the US recently, as you saw, and was mentioned, there is an executive order by President Biden. And I believe there's a report that released one in the 16th of September. And 9 actually out of the 11 were mentioned. And there's going to be more in October. And that's going to include what the US government is going to do with the stable coins, from what I understand. With that, same thing with the other digital assets, but for the ecosystem, I think, though, again, stable coin is the very basis of it, but we saw the Luna cases, the Terra incident. When we talk about the stable coins, if this becomes part of the ecosystem, that's going to have a ripple effect into the overall system. What will be the impact and how do we regulate this? I think these are the two very important questions as to what we will see in the future. And I think these two needs to be dealt in advance. And some say that CBDC is going to replace the stablecoin, but from what I know, especially in the UK, CBDC and stablecoins are two different tiers. They will coexist, but will be separated. And the UK government is making policies for that direction. And I think we also need to see what we can do. And I guess, if possible, to all speakers today, especially to Mr. Lim Twang Lee, what do you think should be the regulations for the stable coins and maybe credentials for who can issue stable coins? Are there any discussions on that, or do you have any ideas? I would greatly appreciate to hear your insights. Thank you.
예, 감사합니다.
Thank you very much for your feedback and questions, Mr. Chung. And Mr. Chung mentioned the necessity for the right policies for the stable coins, and the regulations and the credentials as to who can issue stable coins. Maybe I'll give the chance to Mr. Lim Twang Lee later when we hear from Mr. Lim after. Maybe we can hear your answer now, or later, after we hear from all the other questions. And for the second discussant, we're going to invite Professor Lee Han-sang.
회계학을 가르치고 있는 이한상입니다. 제가 이 크립토 아셋 그리고 디지털 아셋.
So I was interested in digital asset in 2017. You know, when new phenomena occur, you're always interested. And I actually went to BISSOM and I looked around and I studied cryptocurrency and digital asset. I thought this market is going to get big going forward. So it peaked at the end of 2017, and then in 2018 there was the crypto winter, the so-called crypto winter. So the market was a bit dead at the time, and I thought that this is a time for us to really institutionalize. So crypto asset and digital asset, these are used as a means for business for many people, and they probably need to have institutions in place in terms of many problems like tax and so on. But unfortunately, the government saw this as something that will die in the future. So institutionalization means placing regulations, but they said that, or they thought that cryptocurrency or crypto assets, from my personal point of view, thought that they're not worth protecting by regulation or institutions. And civil servants here in Korea usually just calls us, oh, those operators. And Minister Park at the time called us even these entertainment operators. They belittled these people. And we say, hey, let's reduce regulatory uncertainties, let's do something. Nothing has ever happened, but with the new administration coming into place, it has become a government agenda to make institutions and regulations for digital assets. So, digital asset So I'm actually working as an advisor for policy to FSC and other institutions. And we can divide tokens into many different things, but payment tokens are actually the ones that are being used for people to gain benefit. But financial token, their utilities have not yet been proved that they can bring benefits to us. But money laundering, taxation, and consumer protection, and financial stability. But here in Korea, money laundering has been done very well. There's no tax regulation in place, but the government sometimes just steps in and intervenes, and tax matter just gets by somehow. And what's really in discussion right now is about securities token, a regulation and rule on security tokens. Now, before the collapse of Terraform and Luna, no one paid attention to these issues. So Korea actually has a very myopic view. I think the FSC actually has a very narrow view of how to regulate things with regards to digital asset. So stable coins or utility token, anything of that sort. There's nothing really for promoting them. And so people think that the regulations are just about rules and regulations and they're not related to promotion. But Professor In-ho and Mr. Lim, I have questions for you too. So I'm a person who really promoted the digital asset, but 5 years later, I'm still very disappointed. I mean, DTL and crypto assets are very beneficial to many people. It brings wealth and convenience, and we've advertised or promoted that for the past 5 years. But the government still does not see this as a subject of protection. And is it because there's no institution in place? If we have institutionalization, we will be able to facilitate these technologies and we will be able to gain wealth from that? I have doubts. I have a question. So I want to ask you a question about that. Mr. In-ho, that's for you. And for Mr. Lim, there's no promotion act in other countries too. There are regulation acts in place, but there are no promotion act of digital asset in other countries as well. I have never heard about making like committee based on the minister and so on being made here in Korea. But what I heard about Singapore is that they will go to Switzerland or Singapore or British Virgin Islands to issue coins. Coin ecosystem, it's like a haven for coin ecosystem, Singapore. But so instead of regulation, is there like an entity in place that actually promotes digital asset or a committee under a ministry that actually promotes digital asset in your own country? Thank you very much. That's the question. Thank you. So Mr. Lee said that rather than regulation, we ought to also consider promotion of digital assets. And Professor In-ho and Mr. Lim are the ones whom he wanted to answer. And he especially wanted to know whether there is an organization within Singapore that promotes digital asset or a law or act related to that.
Now, we would like to invite from FSS, Director General Kim Yong-tae. Hello, as you introduced, I'm Kim Yong-tae from Financial Supervisory Services. So I looked at the materials from the speakers, and I think there are areas that I want to bring my inputs. I do have a slide. Could you put that up?
예, 딱 한 페이지로 정리했는데.
It's just one page. If you could... Oh, it's okay. All right, so international organizations. Actually, my topic is the systemic approaches to establish the regulatory frameworks over crypto assets. Oh, here we have this. Good. That's the slide. Now, FATF is working on various things, and one of that is updating guideline for a risk-based approach to VAs and the VASPs. There are various guidelines that is coming out of it, and I probably remember 2017 and 18, there was also a measure for this money laundering, and FATF discussion really began with that 2017 issue from what I remember. And also, IOSCO and CPMI, they are working on the stablecoin arrangements. And if you look at what they're doing is that there are three types of the stable coins, if you know. And one that goes to legal currency and the algorithm, and there are three paths for this. And if you look closely at it, it doesn't include the algorithms. And for IOSCO, Mr. Lim knows this already very well. Now, so for the crypto assets and DeFi is being incorporated, and we're also part of this discussions. And for the BCBS, I believe the coin had been categorized by functions so far, but this categorization is new. It's based on the risk level. And when the financial institutions handle this, what they're going to do with the investors, that's the area they're working on at the BCBS. And FSB, not FRB, sorry for the typo. And right now, what's going on with the FRB is that what will be the international regulations and supervisions of the crypto asset activities? In the United States, as Professor Ino mentioned, the executive order that had been we've been waiting for has been released recently, and the gist of it is very simple. All the relative authorities now have clearly set out their stance on the digital assets. Actually, I visited the U.S. a few weeks back, and there is now the very unified and consistent stance from the government agencies. So that has become very clear. And for more details, there is the one side is the regulation, the other is the support. I believe there are 7 main gist of this executive order, and the very first of it that grabs my attention is protecting consumers, investors. We knew this was coming, but it also includes business protections, and I believe that is something that really struck me. And second is as the U.S. wants to keep the leadership in the overall financial market, it's going to keep that leadership in the digital asset market, we could tell very clearly. And let's look at the EU. Digital finance package was released in September 2020. MiCA is included in, and also digital resilience is part of it. DORA is on it, and DLT pilot regime is part of this digital finance package. So these are the 3 big tasks under this package. Right now, the EU now has this on the very final stages of this, I believe. And for MiCA, this is a very good benchmark that we can look into, because this is the first legislation by a country or the EU. And there are 8 different sectors that we can look at. And of course, exchange is one, and custody is another, advisory is another, etc. And I think what's unique about it is that for the custody and exchange, for these two, because it's holding of the digital assets, so there's another layer of regulation. And also on the regulation on crypto, the inside transaction is subject to the public punishment. So I think that's something we can look into the EU case. Now, I represent FSS, and we have the task force for this until the end of this year, and we're looking very deeply into how to legislate this. And again, for the stablecoin, which is being mentioned over and over, in the equity market, some say that digital asset issuance and exchange and distribution will have to be put in a place so that we can eliminate the illegal activities. And it's very close to the equity market. They say it's a clone, but I think we need to broaden our horizon. Stable coin, if you look at the framework of it, is completely different framework. And I think if you look at it, if you look at insurance policies, there is like the one for like a loan type or the investment type, but this is all in the DeFi format already in the insurance market. And I think the medium here is the stable coins. It's not just about the payment itself, but the DeFi services are also something we need to closely look at and monitor. It's like the US dollar tagging. Besides that conversation of the pegging of the US currency, I think we need to go beyond the payment only and then see something bigger and wider than that. And FSC and FSS, we talk about this a lot in different seminars. And I think what's really important to look at is the Electronic Securities Act that we have. And if you look at this act, I think we are talking a lot about including DLP. And right now, everything is centralized. All of the related agencies, like the Korea Security Depository, is in a central level, but having that DLP element in it means that there's going to be a turning point in the digital area. Thank you. Thank you very much for that. So crypto asset and the international regulatory frameworks were some of your, I guess, points that you wanted to add to, and the stable coin and how that needs to be dealt with. Thank you very much. So we heard from the three different panelists. Now, I believe it's time to answer to some of the questions that were raised by our three panelists.
먼저 우리 마스에서 오신
First, from MAS, Mr. Lim, you've had some questions raised to you. Regulations and issuance certifications with regards to stablecoin, and whether you have entities within Singapore that actually promotes digital assets. Organizations or legal institutions, perhaps. So can we hear your insights on that?
Thank you very much for the questions. Maybe I'll just touch on the stablecoin question first. So you rightly pointed out that not all stablecoins are stable. As we see in the Terra Luna episode, not everything that calls itself stablecoin can be stable. Or not every coin that pegs itself to a particular currency can sustain its value. So the primary important thing that we need to look at for stablecoins is what is actually backing the stablecoin, right? So it really depends on what kind of assets are backing the stablecoin to provide that stability. So that's one of the key areas that we are looking at. What are the reserves, the quality of the reserves that are backing the stablecoin? So that's the first point. And also another point that we are looking at would also be how do you make sure that you promise redemption, right? So one of the value proposition is that you should be able to redeem at par. How do you do that? And do you provide some kind of agreement for redemption? So these are some of the issues that we will have to look at when we look at stablecoins. I should not front run my colleagues in this area because we are going to issue a consultation next month on stablecoin regulations, so please keep a lookout for it. So, but for now, these are some of the elements that I can share with you. Primarily, what is backing the stablecoin, and what are some of the redemption agreement that the stablecoin proposes to bring to the table. So that's the first question. On the second question on development or promoting of digital assets, well, Singapore, we have in MAS, we do have a development function to develop the financial sector at large, not just on digital assets. So we work very closely with them, and then we have a fintech and innovation group as well to also facilitate the sector, the growth of the digital asset sector, not just digital assets, but fintech in general, right? So they work with industry players to gather feedback, to gather comments, and to see what are some of the things that we can do to facilitate the sector. Right, so we recently introduced what we call an industry transformation roadmap. And one of the areas that we are looking into would be actually how we can provide infrastructure support for the future. So, for example, our payment rails, what we need to do to facilitate the payments to be even more efficient than what we have today. We have a few projects that are ongoing. You may have heard of Project Guardian. That's one project that we are working together with the industry to discover, to experiment on digital assets in the form of DeFi. Right, so we continue to experiment with the market, hear from the market. So we do have a what we call a development function within MAS that works very closely with our Economic Development Board, which looks at the broader development of Singapore as a center for commerce. So MAS looks at it more specifically at the financial sector. Thanks.
예, 감사합니다. 싱가포르이 디지털
Thank you very much. So in terms of digital finance, Singapore is quite ahead compared to other countries. And your insights were indeed very valuable and has a lot of implications for us.
이 교수님.
Let me clarify my question. My question was like, promotion regulation could not be done within a organization because of conflict of interest within the organization. Are you saying that promotion and regulation are done within your capital market group?
Not within the capital market group. So there's a separate group that looks at it. So
아니요, 그게 아니라 그거를 담당하는 그거를
under the financial supervision group, which is one part of the organization. The development function is in another group that looks at interacting with industry players. So it's under the same organization, but yeah. It's under the same organization, so we find that the areas of balance are well, discussed within the organization, and then that's how we reach that balance. But of course, there are strong delineation of duties. Of course, this is a commonly asked question, so I should just clarify that when there are tensions between development and supervision, we have it in our MAS Act that supervision or regulation will take prevalence over development. I hope that answers the question. Thanks.
예, 감사합니다. 그리고 아까
Thank you very much for that answer.
And I believe there were questions to Professor Ino, so if you could briefly answer to that. I think there were two questions raised to me. So number one is the decentralized finance. Why did it take so long? Or why hasn't it even seen that? And now, second question was, why is there a need for the promotion or the development? The first is actually that really that got me frustrated. I thought we could see the DeFi in just a few years, but that just hasn't come yet. I think, though, if you look at the development of the internet, you can see something similar pattern. I think back in 1995, I thought everything could be done on internet, but there was the Amazon and the after the crash of the bubble. I think it just took more than a year, more than a decade or two. So the social transformation really takes longer than you expect because of the reception that is required by the wider public and different agencies and stakeholders. So same thing here as well in the digital asset. And regulation is there to kind of control the timing there. And also there is the factors of the action, and also there's sometimes the one that reactions to this. So I think, though, although it's not widely acceptable, there is definitely technological advances for sure. So DeFi has been scaled up for sure. And sometimes there are things that we don't think it's possible. In fact, if you think about it, smart contracts can't do everything. And for example, sometimes there are papers over 100 pages of a document, and it's impossible to code it all for me as an individual. And I think it's about, the size is about 2 trillion won, and that itself is already a big progress. And I think besides the size of the market, second change or the important aspect is that the real assets are being really coming together with the assets in the digital market. For example, in digital, there's a game or P2E or the games. And sometimes you can see that a lot of the real economy products and the assets are being combined and converged with the digital assets. And that's why you see more values added to this. Number 3 is that it's not really just one individual or one company that's doing it. The government level discussions is being held right now. Talking about the CBDC, and you can see that really it's the central government taking lead in this. So back in many years, it was an individual's level market, but after some time, it was the company's level. But now and after 2025 until 2030, it'll be the state level discussions and the actions, I think. And the Bitcoin, there is a country that has already taken Bitcoin as the national currency, but I think it's kind of like going to be like the gold that you need to have it in your reserves. I will be cautious to say this, but I think there will be time that Bitcoin or the assets, crypto assets will be like the gold. I think looking at the internet's progress, it will take about 2 decades or 3 decades to see something like that. Now for the agency dealing with the development or promotion, not the regulation, finance is not understood, or at least the digital finance is not understood as an industry in and of itself. There are many different promotion agencies. There's one for the IT, there's one for the health promotion, there's also one for the data industry, internet industry, SMEs, and etc. You can see also even for the art promotion agency, the contents promotion, etc. and you name it. But they're useless, I guess. There's no need to use our tax. No, what I'm trying to say is that these promotion agencies can play a role as providing a roadmap. But we don't have that for the finance, because finances aren't exported, but the situation is changing, and we need to take the leadership and have that as an export item. For that, we need a roadmap, and we also need the policy supports. But we didn't have that yet. Somebody needs to take that gap and fill the gap. Thank you very much, Professor Ino, for that. We were going to give time to the speakers to give the final inputs, and we also wanted to take questions from the floor, but unfortunately, the time is up. So we're going to have to bring an end to the seminar. We spent about 2 hours to talk about the policy directions for digital assets and crypto assets in particular. I believe we had very active discussions, and I hope that you found this to be insightful and informative. So, ladies and gentlemen, this is it for us. Thank you very much for your time.
Thank you so much for attending this seminar. This concludes the seminar on discussion on policy directions for crypto assets.